Sorry, I was on mute. Hi Tarun, hi SC, hi Kumar, hi Jeremy, hi Ganesh, Sai, Srini, Mitchell, Special, Vivek, Ambience. Hi Jeremy. I've done bad as well. Hi Suresh, hi SC, hi Garrett, hi Joy, hi Patel. Good evening, good evening. So today was a little complicated, just to be honest. Uh, I was not expecting this at all. So when market opened today, they were like approximately 1% down, and it never recovered. It just went on and on and on and on. And like once it lose 4260, which was in our sheet uh, from yesterday, if lose 4260 is going to hit 4215, 4153. By the time I realized, uh, it was too late. It was just free falling. Yeah, even me, like I was doing all right. I gave up all the weekly gains which I had in the market yesterday. But that's not the end of the story. Uh, Now, what has been done is done. We need to figure out what can be done uh, tomorrow or what can be done next week. Most likely, market is going to make newer lows for the year because the way it has been decimated, and I uh, went back and figured out why it went down. It's not a big fund. The way it was getting decimated was not a single fund. It's I I'll explain what I think was the reason behind this, and that could be a major economic concern which can hit us in coming months. Once we have like 10 to 10.3, I'll explain that. It's not someone was offloading hard. You cannot offload the market like that. You cannot offload for like 7 hours consistently. No, it was consistent, systematic selling throughout. There was not even a single stock. If you look at uh, the market watch and look at the indices, this is Dow Jones. Not even a single stock green. This is Nasdaq. Not even a single like in, excluding BKNG, everything was like four super red. This was green. S&P 500 mostly red, and they were heavy red. So again, I could be wrong on that interpretation of why this market went so bad after yesterday's press conference and clarity that yes, we are going to have 50 basis points hike. No, some again, I see. Don't post something stupid. You cannot offload something like that. No. Stop posting all that. This is not rumor. This is not anything. You cannot make that kind of sell off in the market with all those rumors. No. If rumors have to do something, they can. Again, I'll repeat myself. Please stop reading articles. Look at the data and take an interpretation from there. If you keep on thinking what has hit and keep on believing in something else, then you will end up in the same mistake again and again, again and again. So, again, I'll take a pause. I'll explain what happened. You can go back, validate that. If you think there's some more to it, possibly add. If you think I may have taken the data, it was bad, then appropriately we can fix that. SC, I don't know what you want to do. Just I will say please stop for now. I don't want to get into an argument. If you don't want to understand, it's your choice. So point is, let me open investing.com. The people have, again, I cannot make you understand. If you don't want to understand, it's your choice. I have no problems. Where is calendar? Technical economic calendar right here. So this was economic calendar for today. And let me 8:30. This was something which really hit the market. Not the job numbers, but this thing. People will not even appreciate that. This was the main cause why market went down like it happened today. What does this non-farm productivity measure means? You remember yesterday in the press conference, Jerome Powell was clearly mentioning that yes, economy is strong, labor market is very strong, employment market is very strong, and they can easily take in all these tightening policies, right? And he said very clearly, if there is an issue with the labor market or economic growth, then they will think about tightening. Now, what happened here? You see, this is called US non-farm productivity. It was expected to reduce by 5.4%. It went down by 7.5% on the negative side. Now, what it does is it clearly gives you an idea that companies are overpaying and their margins are getting decimated because you are paying at least 7.5% more than what you are generating for an employee. So this was supposed to be 5.4. Like all this time, they were making good money on the productivity. Now, as soon as we had minus 7.5, it means that company are going to lose excessive margin. And this is the highest productivity loss in terms of corporate. Now, what it does is it tells the company on their balance sheet they are paying extremely higher salaries and the amount of outcome they should expect in terms of revenue from an employee is 7.5% less. What it will do, it will offset the employees from the corporate jobs, which will hit the job market. If the job market is weak and everything goes into a different direction, that is the impact of another rate hike. So from 50 basis points, it can increase to 75 basis points. And that's where it got really, really bad. In the last 3 years, this is a substantial 7.5% productivity downfall. It was nowhere in the last 5 years. So this was substantial hit and market was not expecting. And as a result, 75 basis point was expected. Second thing, it's going to do a ripple effect in the labor market, will increase competition, reduce the salaries, may even do some kind of cost cutting on the jobs. So this should, again, for me, this was the main factor because I could not comprehend anything else. Because yesterday in his press conference, he clearly said 75 basis point is off the table and now they are going to be data dependent. This data I was not even expecting hit the market and hit it really bad. Nobody was able to understand why this data is like this. You will not find this on news. You will not find anywhere. People will simply say there was rumor, there was offloading, there was just bull trap, bear trap. No, it was clearly evident. Everyone was caught by surprise because when you were expecting this to go by 7.5%, which is not there in the last 5 years. So if you think there is something more than this, again, I am a person who believe in the data. This is the only deviation which I could found. If you think there's something more to it, I'm going to share the link right away. We can collaborate, figure out any other possible reason. If we have, it's not more unemployment. It's going to be hitting the corporate benefits, corporate margins. This will see these kind of payroll issues. They do impact, but not immediately. So if you break it down into the candles, look at the impact of this market. This was 8:30 candle, right? This number came in at 8:30. That's the time it started losing. It lost 42.63, 42.60, and I even posted in the morning that if we lose 42.60, we should exit our longs. I myself ignored that, and I had butterflies from Amazon and some other spreads. I was not at all in the loss early 20-30 minutes, but I greedily, that's my greed. I opened up the legs on the butterfly on Amazon. I had 7 butterflies, and that hit me a little bit. I had UPST that killed me. UPST spread really killed me because it just decimated the premium. So that was the main cause of my loss. Once I was in loss, I have decided in the past, if 2 trades are not working for you, sit down and wait. And that's what I did throughout the day. Now, I still have capital, unlike all the time in the past where I used to decimate my account. I still have substantial capital left, which I can use to recover my losses and come back next week. So I'm not worried about loss. I can recover that. I have 100% confidence in me. It's just that I want to see a clear direction here. Tomorrow could be a roller coaster like today because we have an economic number again. In case market reacts to the economic numbers, we might have some serious moves. Again, if you go back to my conversation since December, when I was talking about the decimation of the growth stocks, market going back, people were calling 5,000, 6,000. And I gave so many examples that unless and until there's no fresh money, nobody's going to buy. That impact is going to hit us as well. If economic data is going to be not in the favor of market. Market is going to react now and coming to the real valuations. Again, it will not matter whether you are a big stock or you're a penny stock. If they want to slaughter your account thing, they will. So this was something I wanted to share. Again, I've shared my link. If you have any other opinion, come and talk, and then we can figure out whether we have any other additional reason for this slaughter in the market, or we are right. And next time we need to take cognizance of another economic number which is coming tomorrow. Yes, Sabharwal, this was the thing which pointed out. So Mr. Sabharwal has posted the information properly where the increase in compensation is there, but decrease in the productivity. And that was massive, which is going to hit the company margin really, really badly from now on. Jay, you want to say something? You are the only person on Zoom.
Oh, I had a question. I have a question. Sorry. We noticed that it's trying to rally up at the end of the day. So, do
That's
you
the
think?
short covering which happened.
Okay.
So if I break it down into 1 minute, just to show you, this is right. This is the candle for 50 points. This happened in from 41.06. I had future long at 41.11 and I had stop loss of 41.01. It hit my stop loss right here, made a low 40.99, which is my green line, and then bounced and bounced like almost 50 points in 1 minute. Nobody can trade in 1 minute. So this was set up by machines that if you have certain position open by margin, so they need to start closing by 3:50 to 4 o'clock. So this was that. This is not human. This was most likely run by exchange to close the margin positions for the day trading.
So don't expect an up tomorrow then.
No, not at all.
Okay.
See, we need to have a reason for going up. Right. If I feel that it's going to go up, it might do one day, but it's not going to happen every day. Again, let me do one more thing. Let me just post the Zoom link, guys. I'm inviting you all to come and talk. Unless and until we talk, we clarify, we clear our heads, it's not going to help. Yes, Venki.
Yeah, hey Naval, this is Venki. Thanks for doing all this. I'm a bit new to this. For the last 3-4 days, I've been attending this. So, what is your thought on the short index funds like SQQ and other things? I've seen that in the last couple of months, those have been doing well because the market has been kind of getting battered, right?
One thing you need to understand: SQQQ is a depreciating asset class. VIX is a depreciating asset class. You may find them running higher, but if they change direction, they will simply kill your account. So if you want to go short, go with the right route, go with either future shorts or go with the puts for SPY or triple Q. If you go by SQQ or VIX, long is always difficult. You may make money one day, but you will lose money 99 days.
Got it.
But triple Q, because again, there's a difference between a depreciating asset class and a normal asset class. Depreciating asset class, like for SQQ and for VIX, their futures are already 20% down for next month. So if you switch from this month to the next month, your SQQ or your VIX will already depreciate by 20%.
Got it. But not on a regular basis, right? My question is more on like
No, better
when
to
we see
go into puts.
Sorry?
It's much better to go with triple Q or SPY puts.
Got it. Okay, that helps, Naval.
And if you want to go trade, always sell the calls for SQQ or for VIX. When they reach their potential, just sell them. They'll the best trade. Selling the calls for VIX at around 34, 35 is really, really good. Anyone else wants to share their opinion on today's hit? You can raise your hand and I'll open the mic and we can talk. Anybody has any other opinion, guys? You're most welcome to speak. Yes, Mr. Zoom.
Hi, Naval.
Hi.
Just a quick. Um, so yesterday your sentiment was like totally bullish,
Yes,
and today I'm
that's why I
noticing.
got burnt.
Yeah, I mean, so is it the bear market uh, or is it like the 1 day sell off? Just
No, no, no. As I said multiple times, we are in the bear market. We will see spikes which will be sharp and they will be sold. But I totally underestimated the power of productivity number 8:30 this morning. I totally ignored that. Just to be honest, that was my fault. But my view regarding 4260 cut off the long, that was right. But I myself ignored that advice on me. That was the reason I got burned. And when you're in a long position, it's take time to switch into shorts. So instead of going short, I sit back and just waited. I didn't want to burn more and lose more. And
okay.
again, I am open to mistakes. I make mistakes, yes, but I know what I did wrong. Next time, I'll make it better. That's what I can do. You were saying something else? Zoom user? Yeah, I don't have your name. So,
No, that's Gary. Yeah, thanks.
hi, Gary. So, if you think that market needs a direction now, for sure, because the way we are sold off, you see, we completely covered the body of 2 days. Like this was a morning star. So today we completely covered. The moment we lose 4260, we came 4153, we closed around it. So now if we have to bounce, we need to close above 4153 for some move towards 4200. That's it. I don't see anything else. The way, if you look at the percentage change, look at these stocks: Wayfair 25%, ITSI 17%, Neo 15%, Affirmed 15%. How many of you are holding Affirm, Neo, ITSI? Most of them, most of the people. And these are decimated. Do you think a firm will see 176 ever? I don't think so in next 10 years. So market goes up. There are stocks which needs to go up for the market to go up. Today, I did not see any single stock. This is my watch list. You can see how many of them are green. Only two, Lyft and Twitter. Twitter had its own news and Lyft was already killed. So there was nothing left in the Lyft to lift it up. But this was a serious sell off. It might happen again. But I want to, just to be fair to everybody, I want to start the day fresh without any overnight positions. So I did not trade. So I'm waiting. We'll see what happens tomorrow. And if there's any opportunity, I will trade. If there's no opportunity or no clarity, I will not trade. I will not try to fight the market and do a revenge trading. That yes, I lost 5,000, 10,000 today. I need to recover. I might take 10 days to recover, and I'm more than fine with that. But I have learned over the time, there's no point fighting the market. It's not going to help. You need to sit back, have a clear head, figure out and trade, and then you will recover. See, lose is not healthy or not uh, gives you a good feeling. It applies to everyone, but in order to recover, you should not lose more. You should wait. If you lose in 1 day, you might recover in 5 days. If you recover in 5 days, that's more than enough. Hi, Surya.
Hey, Naval, how are you doing?
I am good, yeah. I'm totally fine.
Okay. So quick question on this, right? So money is definitely gone out of institutes, right? Otherwise, this one big sell-off happens. But usually, do they sit on cash? Usually, institutes don't do that, isn't it?
Where is the cash?
So if they close the positions, they should get
See,
the.
that's the thing. The cash is vanished. These are all. Now look at what do you call Kathy Wood, for example. She's a fund, right? ARC was 160, 170. People were investing in that. Now that is gone. It's now trading at 40. Now, if you invested in that, you're almost 75% down on it. Where is that gone? That is a valuation which is like gone from the real world. They are not sitting on cash. They are supposed to invest, but where should they invest? That is the big question right now. So I'm not saying they are not going to invest in the market. Funds are supposed to invest. They cannot sit with the cash, but they also need to take into cognizance that there is equal and opposite amount of selling is also happening. And right now, balance sheet reduction has not even started yet.
Yeah, okay.
So they will be buyers. Right now, it's about 17 billion, which is going to be offset. 40 billion is still coming from European Central Bank. If we push something from the local funds, we can offset it for now until June. After June, European Central Bank is also going to zero.
Yeah,
Then
because
it's going to be a little difficult for market, even if the funds are supposed to hold or buy, that will be offset. That's why if you look at 95% of the fund manager last year, they were in losses. And this year they will be in super losses.
I think you're right, because I was surprised that even month end pop-up also didn't come for us, right? I didn't see anything last Friday. I expected a bit more.
It's getting offset.
Yeah, I think that's what you're right. Yeah, it may be offsetting now. Thank you.
And offsetting is really, really complicated because now Fed has clearly said they need to mature mortgage-backed securities. So it's going to hit reality pretty soon. Again, I'm reiterating myself. I have said regarding these reality sector is going to hit really, really badly. Then we are going to have bond market yields. So people who are short on the bonds, they are going to suffer. Currency is going to be a little complicated for now. And equity market is already suffering.
Yeah, right.
So,
thank you, Nal.
so again, we will trade, we will learn day by day. It's not an easy market to trade. It's not an easy market to invest. One of my friends lost about 900,000 in just 4 months. He met me in January. He was $5,000, $500,000 up. Now he's $900,000 in loss, about $1 million. And he is a pure investor. He does not trade. He was invested in Google, Amazon, Microsoft. So if you can lose money in them, you can lose money anywhere. Yes, Vijay. Vijay, you want to say something?
Yeah, Naval bhai, can you hear me?
Yes, I can hear you.
Hey, Naval bhai, so my question is that I have so much into ARC funds. So last year, every month, I used to buy these things. So I'm still holding them. I'm glad that I closed some in Jan, but I'm still holding them. Not sure what to do. I mean,
Again,
is it better
I
to?
don't see it appreciating really soon.
Yeah, because right now the growth itself is being halted. So I think it's no point keeping them holding now. And FNGU,
I'll give you my honest thing.
uh-huh.
It's like from the Indian market. I started to add Pungiloid, which was a really good company in 2008,
Mhm.
similar to Larsen and Toubro. I started investing in it at 400, averaged
Okay.
it at 248, 100, 60. Now it's at 1 rupee.
Oh man.
So I've learned by making mistakes. That's why I have stopped investing.
Yeah, so somehow like this arc only I'm holding. I burned my hands with EH stock. You remember EH last year? So it was pumping so high. I did the same thing. Like I averaged at 100, 80, 60 like that. Now it is at 15. So I
It's
so,
better to salvage, clean your
uh,
head, and
yeah.
try something else to recover.
Yeah, sure. No.
That's what I do.
Yeah,
That's the
sure.
reason I did not trade much today. Once I was in loss, fine. I booked my loss, sit down, clear my head. There is always tomorrow. I'm not
Yeah,
dying. Market is not going away. There's no alien attack anywhere. We can come back and we can hit the home run once again.
yeah,
Why
sure.
not?
Thanks, bye.
Right?
So like, yesterday, like I made good. I mean, not good, but yesterday I made around like $1,500, and then at the end of the day, I bought um, SPX call 4320. So I
See,
bought it
no,
for
again,
around
like I'm saying, nobody was expecting this.
15. Yeah, yeah,
Nobody was expecting a downfall of 7.5% in the productivity against increasing uh, compensation,
Mhm.
increasing salary. That was not expected at all. It didn't happen in 5 years. How can you expect it?
Yeah. Yeah. Sure. Definitely. Like today was
Right?
like
So one of
stock
the
was
person I
surprised.
follow, Scott Redler, he
Uh-huh.
also lost like about 40,000 in first to 10 minutes.
Oh
But
man.
everybody was long.
Yeah. Yes. You mean Scott Redler, right? Red Dog.
Yes.
Yeah. Even I follow his 6:30 club every day. So yeah. Thanks.
I don't follow his club, but
Uh,
my best friend is a follower of him, and he told me
yeah.
at 9:40 that yes, he also lost because we were not expecting this number to be really bad.
Yeah.
Tomorrow we have job numbers, payroll numbers. Let's see how the market reacts to that.
Yeah. Sure. Yeah. Thanks, Naval.
No problem.
Thanks for
Again, my
hosting
goal
all
is
these
not
classes.
to do analysis. My goal is to help each other so that I can also get help from you guys. Like Mr. Sabarbal is posting the really good information in the chat that we can learn together as a community, help each other. That's it.
Yeah.
That's
Sure.
our goal.
Yeah. Definitely, bhai. Yeah. Thanks so much, Naval.
No problems.
Yep.
Yes, Michelle.
Yeah, hi Navar. Nice to hear from you again. Um, so this is more like a psychological, question. I've been noticing a lot recently with ES and SPY. There's been a lot of volatility in the market, a lot of big movements from one direction to another interday.
Yes.
So, going from like a swing trader to, a day trader mentality, because everything changes, it seems like, with the macroeconomics and numbers every day. What advice would you give like new traders that came into the market, back in, I would say, late 2019, the early COVID to like now, where they're dealing with this first bearish market?
No, this is the first real market you have seen.
Correct. Yes.
The last market from 2019, in fact, from 2018 end, Fed was infusing capital into the market. It stopped in 18 and then started again in 19. A little bit. European Central Bank was like 2017, 2016. They were the years in which market moved just higher, higher and higher and higher and higher, because there was huge amount of money coming flow from European Central Bank. So anytime you used to swing, it used to work out really, really well, because there's enough buyers and there's fake asset demand, which was there. Now that has changed considerably. Now market is reacting to economic numbers. Market is reacting to your valuations. Market is reacting to your earnings. Market is reacting to federal policies. So with all this, I would say the best bet to trade is start trading the index. Stop looking into the individual stocks. Start looking into the index first. Because in SPY, we have 500 stocks. There may be one stock up, two stock down, three stock up, four stock down, which is very complicated to trade. So if you are an investor, start accumulating into the index funds like SPY, Triple Q. And this horizon should be a longer horizon, because if market drops, you should keep on accumulating the index. I do not recommend individual stocks, because stocks may go up, may go down, but eventually index has to go up, right? So that is from an investment point of view. From a trading point of view, this market is totally not for swing. It is a market where you need to see the profit and book it. If you cannot do that, then there's no need to day trade. You will eventually lose your capital. If you are sitting on cash till the moment market has a clear direction, wait for that opportunity. Otherwise, even in the day, like if you were short this morning, market gave you a very good opportunity to make excellent amount of money. But as I was long, most of the people were long, and it was not easy for them to switch into the short side. That was a thing which held me back. But I did not make new positions either. I sit back.
That's what happened with me, because like you said, everything. I think I've noticed a lot of new traders, a lot of retail traders, just in general, day trader, SPY and the QQQs. They've been making such big moves in one direction or another, or they're so choppy. It's kind of like your mentality is, it happens so fast, and the bounces and reverses happen so fast and so hard at those major levels, compared to maybe like a year and a half to 2 years ago, where, SPY was maybe only moving, $2 to $3 a day, compared to we're having $10, 3-4% moves in either direction, and reversals within a day.
And that's what happened. Like yesterday, if we have to go down, why we went up 3%? And if we went 3% up, why we came down 5%? Nobody can explain that. Like, if you look at the market, we are exactly same point which we were on Tuesday afternoon. In between, many people's account are decimated. So if you cannot handle the volatility, first, the foremost thing, learn to save your capital. Second thing, reduce your size. If you're used to do 10 lots, do 1 lot. Do 1 lot. Because in this choppiness, if that 1 lot has to work, it will give you ample opportunity to make money. If you are in a loss, do not average your position, no matter what happens. Do not average. Start to cut losses. If you do this, you will have capital, you will live through this hard time, and then once you live through this hard time, first you will build patience, because now you're trading with less number of lots. Second thing, you will understand and appreciate the market volatility, that there's no need to rush in the market. Third thing, you have seen the worst, so now you will appreciate the power of taking a trade. So I would recommend all these points to people who are just new into the trading. Learn to save the capital first before making the money.
Thank you so very much for those words. I appreciate it. That's all I had.
No problems. Venki, you have anything else?
Yeah, one question I have, Naval. So with all this uncertainty right now, right? is it better to buy some of these I bonds and park some money there for the next couple of years? Because I believe for the next 6 months at least, they have logged in 9% or 9.6% interest. These are government bonds, right? And after that, we don't know how it is. But what is your recommendation on parking some money at least for the next couple of years in these bonds, assuming that they are at least
I'm always in a favor to have, see, I'm a person who is always in favor of having money market, meaning the funds, the deposits, the bonds. You should always have 30 to 40% of your portfolio there.
Got it. Yeah, I mean, I don't know if others are aware, right? I can paste a link here if people are interested. Just have a look at it. The only thing is, you need to lock in money. If you withdraw it, then
I can give a session on that. I am pretty good in bonds.
that would be helpful, man.
I can explain them the coupons, zero coupons, yields, how to redeem them, how to pay upfront, but point is, people want quick money.
Yeah, that's the thing. That's the risk. So that's
That's why
one
I
question. The
never,
next one I have is Naval. See, some of my investments, like earlier, which I did all exactly during COVID, right? All have hit those levels. It's just like Disney, I bought at like some 127 or something. Now it's fallen down to 112. Right, and I bought the CRM also, and then that is also fallen now. So with all these falling now, if you are looking at the horizon of next 5 to 10 years, right? As you said, SPY QQQ as a monthly investment, recurring investment.
see, one thing which I would like to add here, that in SPY, you may have replacements, but SPY is going to still be there. You may lose some of the stocks from the SPY in coming 10 years, but SPY will still be there. That's why I always recommend index is much better than individual stocks.
Got it. Got it. Okay.
Problem is,
And then
we
the last,
keep on adding into the stocks because we think it's going to have a better return. But if you go and do a CAGR, only couple of stocks have substantial returns. 99% of the stocks, they have average returns, which are less than the index returns.
got it. Got it. Okay. And last thing is Tesla bubble still around there? I mean, a lot of with what is happening with all these companies right now, right? Tesla obviously is trading at, I mean, as compared to the peers, right? The automobile and the rest of the market.
It has its glory. It has its past its glory now. It will also come down. It's down 10%, right? 8-9% today.
Yeah.
Just a matter of time. 1 year Tesla missed something, it will cut into half. Just 1 year. The market is not going to leave anybody. It's a slaughterhouse. It's just a matter of time. When is your number? We were expecting 4,000 on Amazon. Where it is, 2,300.
Yeah, that is true.
Everybody was saying 5,000. Everybody was saying Google will go 3,500. Where it is, 2,300.
Yeah, and both these even have splits, right? Google and Amazon still have their splits. So
See,
the
again,
rate might
split. I've been keep on saying split was nothing. It's just if you have $100, you're splitting that into 10 each. People, retail investors did not understand that. They think, oh, splitting something will change their world. It has no impact on the economics, no impact on the margin. But what it has done is has made Elon Musk the richest person on earth. That's what it has done.
got it. All right. Thanks, Naval.
Yes, Praveen.
I know all my
Hi.
for all the motivational words. I guess everybody on the call needed those.
Motivational words, I will say, it's okay. We did losses. It's fine. We should take learning from it.
Definitely.
Right? We will not give up. We will figure out if market has to go down, we will take that opportunity and short it. I have no issues shorting the market. Point is, we should have clear head. We should stop doing overnight positions, which I stopped But somehow today I opened the butterfly legs into Amazon and UPST, and that killed me. If I did not open them, I would have went short and would have made money.
And as they say, to err is human. So human tendency, everybody.
That's what I'm saying. If I did not had overnight positions, I would have been open to short. Because you see clearly in my sheet, right? I mentioned 42.60. Even on Twitter, I posted very clearly that do not go long. Come on. That's my Twitter. Let me just see. I even posted that right before the market started. Come on, come on, come on, come on. See, I posted market has eased off, expected 42.60 should be held for any longs to remain healthy. I clearly mentioned that 15 hours ago. But because I had my Amazon and UPST positions, I busted myself.
I mean, sometimes the bias can come in, right? I mean, we saw a really good day, so the bias was there that we will have a follow through of that.
That's the thing. Like once I lost in Amazon and UPST, I just sat back.
And that's the best thing to do, as you said, no revenge trading, because to make up the losses, it can add up to the losses.
Absolutely. And people will say, oh, you are a bullshit. You don't do. I posted that even before the market started.
No, man, no bullshit. I mean, the levels were there. It's just, yeah, I mean, that probably that big up day built a bias. But I actually had one observation and one question.
Yes.
So on the volume, I know you don't have volume on your chart, but on the SPY and QQQ, the volume was really high today. QQQ was more than 40% higher than the 30-day average, and SPY was more than like 33% higher.
If you have this kind of moves, you're going to have a higher volume.
Right. So yeah, that's a bit concerning for the long side. Seeing that,
Even ignoring the volume aspect, right? Ignoring the volume aspect. This was nasty.
yes,
We opened gap down and it was completely shadowed the body. It ignored the 38.2 percentage and then hit exactly 413.75 where it closed. So even in the market, it closed right at those levels where it was supposed to. But point is, if it had to happen, why it went up? That is something was difficult for me to comprehend in the morning. And later in the evening, I was coming from office in the train. I looked at the economic data and then I realized, oh, bloody hell, this was the main reason why market went down. Otherwise, I had no idea throughout the day why market was going down.
and probably funds are looking at those things as they come.
Yes,
So
because funds have their operating models, right? They
not
make
only that, they have hundreds of people that are paid to look at these things.
so.
And the question I have is, so yesterday J. Powell mentioned 47.5 billion reduction, 30
Yes.
billion in Treasury, 17.5 in MBS. He did not mention anything on the corporate bonds. So
that will come like mortgage-backed securities have corporate bonds covered into that.
So they have Apple and Microsoft and Google corporate bonds in the MBS?
It depends. It depends how these companies have, like they may not have direct Apple bonds. They may have from Bank of America. Bank of America may have leverage in Apple as an investment. So they may be not directly, indirectly. Also, like I know because I looked at the balance sheet of Boeing. Boeing has a bond of about $60 billion. So you can imagine that how much money is going to go out from all these companies.
Exactly. So when the Fed in a future meeting announces that they are going to start selling those corporate bonds, that will put much more pressure.
Yes, that's what I'm saying. That this why people are saying we should invest in leaps, and that's what I'm saying. Why would these stocks go up? I have no idea.
The leaps will be killed because of the time. I mean, if the
Yes,
market goes sideways, it doesn't go up. Even then, they'll be killed.
the leap thing, like people who made money in 2020 and 2021, they have already given up all that money, and now
Yes.
they have already losing that because they do not understand that market. It's not easy to make money. You
Right.
have to be very careful how to make money. But people have taken this as a betting site. Oh, come here, put something, and yes, you will make money.
And just like you mentioned about your friend, like a friend's friend is in a similar situation where his portfolio was more than $1 million last year, and he's an investor. He did not take any profits. He would just keep buying more and more of all the supposedly good stocks, like actually the mega caps, and he has lost more than $500,000 of his portfolio. Like it's cut in half. So
People
this
who,
has been a
again, like I'm just extending my conversation here. People who had taken margin loans on their stock options, like people who got into big companies, they were given stock options, and they have actually taken loans on those stock options. They will feel in trouble. It's a cycle. It's an economic cycle wherein if you have a position, you have taken a loan, and you have taken a loan on an asset. That asset could be not an asset, liability. That could be a home, that could be a car, that could be anything. Now, if you're not able to pay that asset, you have to sell that asset. And now, once you start to sell that asset, there are no buyers in the market. Like today, when we are looking at the fall, there were no buyers in the market, not at all. Similarly, when you're going to sell your asset, the loans you have taken against those assets, they will also start to default. So when this cycle starts, it's going to hit the banks. And that's why JPM, which was 176, is at 120. Bank of America, 50 to 35, 36. They're already taken into this, into their accounts. That yes, this will happen. And now imagine which companies converted from 100 billion to trillion dollars. Nvidia, Facebook, Netflix, Amazon, Google, Tesla, Apple, Microsoft. Now, in order to offset $17 billion selling, where will be the money coming from? That will not come from Fastly. That will not come from Roku.
right.
That will come from these big caps.
Exactly. And everybody loves Tesla. I mean, Tesla was $50 December of 2019, and it
And
went
what have they done? They are still the least producing cars in the entire world, and they are almost 4 times than Toyota, which is the most car producing company in the world.
right. I mean, they did not have a 25 times growth, but the stock went up 25 times.
That's why I'm saying that this, what do you call split? Tesla split was done on a purpose. They wanted to take advantage of the Fed money. That man is shit smart. He is super smart.
Yes, he is. He
This
acts as if he's smoking weed and stuff, but he's smart.
he's bloody smart. He knows what he's doing. So he knew that Tesla days are over. That's why he's moving into Twitter. Do you think he's idiot? Why is spending 44 billion for a company which is making losses?
Right.
No. You have to think through it.
Yep.
But
Thanks for your discussion every day.
no problems. All right. So I'll just give you the views on the index tonight. There's no point discussing any other ticker. Let me just read your comments. SC, you're just writing S's. I don't know what you want. mean by soft landing, Gary? I do not understand in what context you're talking about soft landing. So I need to figure out. Tomorrow we have unemployment numbers. So let's see how the market reacts to that. Melancha, generally big money trade after the, see this concept, big money, fund selling, this is all the new terms which came after 2018, 2019. I don't know what to answer on that. Thank you, ambience. MK quality names, I will still wait. I will still wait. Shopify, I think 400 is the stop loss for Shopify. That's it. If it loses 400, it's going to be bad. So Nagendran, if you are looking at Shopify, 400 is your cutoff. If it goes below 400 in terms of interest rate increase, soft landing, I think from his perspective, again, I could be wrong on this, is something that instead of increasing 50 basis points for back-to-back for the entire year, they may come around 25 basis points. Looking at the market, looking at how the economic cycles are convoluting in the next few months. I do not trade on gamma levels, Milit. Absolutely, Aditya, there's good enough scope for selling in Amazon, Google. Why you think a company who's making $100 billion in revenues is to be traded at $2 trillion? Walmart make 150 million revenue in a quarter. It's not trading at $2 trillion. Believe Square, just to give you a disclaimer, I have long position on Square. I have 105 calls. So I don't know whether it's short on rise or it may explode, because last time it went up and up and up and up. So I don't know. They had really bad earnings from just looking at that, but I don't know. I did not look into their financials. SC, again, SC, I don't know why you are posting so much and posting unnecessary. I'm helping others. You're not helping others. You're just creating confusion. And this is called noise. So I'll not take more time. I'll just jump on to. Yes, Vijay, you have anything? I've unmuted you. No. Yes, Praveen.
Yeah, about the soft landing comment, I was also wondering about that. Does he mean soft landing for the stock market or?
No, soft landing meaning coming to a 25 basis point hike instead of 50 basis point hikes.
But he also said that there may be multiple 50 basis points. So
that's what I said towards the end of the year. Every single meeting we're going to have a hike.
Right.
This is going to kill the real estate market. Again, I'm reiterating myself. People who bought houses in 2021 by bidding wars, ignoring the inspections, ignoring everything, they will regret in their life.
Yeah, and some of those loans may be foreclosed.
They will start to foreclose.
Yeah.
And problem with that is that if you bought a house for 1 million and you paid 200,000 above and top of it because of a bidding war, now the real valuation is still $1 million. But you fought with other people and added those 200,000. Those 200,000 are gone. So now when you try to sell that in the market, it will be sold around 980, 950. So that's a loss of almost $250,000 right away.
Right.
Now people will have much more choices. They will say, oh, I don't want to jump. I can wait. Second thing, they will ask, oh, this is not working. Fix that for me. Few months back, okay, it's fine. If it's not fixed, I'll take care of it. I'll replace the roof. I'll do all this. Now the buyer will say, I want everything to be done.
Right. Okay, thanks.
All right, guys. So let's focus on the index. I'm not going into any stocks tomorrow, but the index only. ES, SPY, and QQQ. And I'm not posting this information tonight because there's nothing much to be posted. So in case of ES, let's look at the Heikin Nishi. In case of ES, Heikin Nishi is not showing anything clearly, so ignore that. But if you look at here, this was a green line which I made few weeks back once it tested the low here of 41.01. Today it tested the same 40.099. Now I'm of the opinion if it doesn't cross 41.53, it will go back and hit 4,030. So right now ES is totally negative. It's short. It's sell on rise to 4153. Stop loss is 4165. And target is 4099, which is today's low, and 4030. Extremely high possibility it can go down. And on the neutral side, if the employment numbers or whatever numbers are coming tomorrow, if they are good by above 4153, we might see 4226 and 4260. 4226, 4260. There is potential for a bounce if those numbers make up. So tomorrow's breakout was a false breakout. So we need to clearly see what happens in the market tomorrow. So that's there. SPY. I'm not going into stocks because the levels are really time consuming. I may post them in the morning if I get up early. I'll do that and I'll post it. But right now I'm just going to the index. Same thing is here. 43, 413.75. It loses. It has to test 404, 400. That's the gap it has. So it's short. Sell below 413.75. Stop loss 416. Target is 404. 465. 70% possibility of going down. I'm just making it matching to triple Q. Triple Q made 309. Sell and rise towards 315. Sell and rise towards 315. 7th. Stop loss is this area 318. Target is see the levels have gone so far that I don't even have. There are gaps of 296 295 and there is some support at 310. So 310 is the target first, and then is 298. Sell on rise. And this is neutral. And this is also neutral. I have to cover SPY neutral. I missed that. I'll fix it. So on the neutral side, on QQQ, if it goes above 318.45, above 318.45, stop loss is 315.70. Target is 325, 326.50. That's neutral. SPY, I missed it. So let me just go through SPY. It bounces above 416, buy above 416. Target is 424. 429. Stop loss is 413.75. All right, guys. Tomorrow I'm looking forward to just wait and watch. Once I'm done, I'll post any trade if I'm taking. So I'll post the tickers in the morning. For now, I'm going to post only the index. Let me just read the comments. Kumar, thank you. Psychic trader, I'm planning to wait before jumping into trading. Baba is not working out at all. Canadian real estate is a big bubble. It already dropped 20. Inflation doesn't come down until we see recession. That is correct, David. If the numbers are strong, market will not like it. Numbers should be bad. They should be bad. If they are bad, see now it's a two-sided knife. If numbers are good, there's more possibility of 75 basis points hike. If number are bad, economy is going bad. Market will also not like that. Because there's no Fed money now. So if there's no Fed money, bad economy, it's not good. Yes, I mean, Tesla goes down, it will go down. Thank you, Ramki. That's, I think, a good appropriate definition, bringing down the inflation without crashing the economy. So if everything is good, they will reduce the maybe this statement is much perfect than what I was saying from Ramki. All right, guys. Thank you very much. Good night. We'll see you tomorrow. Raghu Kumar, these people do not use any indicators. They have their own algorithms to define their data models. I'm still not in favor of call spreads, Mr. Chaudhary. I would like to wait. It's a call spread or a credit spread? I don't know. But right now, I'm not in favor of call. I would love to wait it out. All right, guys, I'll post the 3 index views, and let's see what happens tomorrow. All the best to each of us. And if you're still worried, have any concerns, you can reach out to me. You want to call me, you can call me. I can give you my number. You can talk to me, but don't feel depressed. We will see good days. All right, don't panic. It's just that we lose so much of hope in one negative day, but that's not the end of the world. We will make a comeback. We will make much more money than having the losses today. Cash cover put sell. No, Mr. Chaudhary, do not sell the puts in this market. Don't try that. All right. All the very best. And we'll get it back. All right. Thank you very much. Good night.